Hello and welcome to Crypto Craze, your go-to source for the latest and greatest in cryptocurrency news and education. Buckle up for an intense ride as we take you on a journey through a content-packed video that is not to be missed. So please hit the like button, subscribe to the channel, and turn on post notifications. For our first story of the day, USDC is having a bit of a tough time lately. The stablecoin has been facing a wave of redemptions in the past few days, with over $6 billion being redeemed since Friday. And if that wasn't enough, the largest single redemption in history just took place, with a whopping $723 million being sent to a null address and burnt. Ouch. Really quick, guys, it's worth noting that I am not a certified financial or investment advisor by profession. Please understand that this video should not be taken as financial or investment advice, though this likely comes as no surprise to you. But let's back up for a second. For those of you who might not know, USDC is a stablecoin that's pegged to the US dollar. That means that for every USDC in circulation, there's supposed to be a corresponding dollar held in reserve somewhere. It's a way for people to trade cryptocurrencies without worrying about the wild price swings that can happen in the crypto market. So, why all the redemptions? Well, it seems that there were some concerns over the reserves backing USDC. Specifically, there were worries that the reserves were stuck in failed US regional banks, which caused people to start redeeming their USDC en masse. Circle, the company behind the stablecoin, halted redemptions on a recent weekend, but they resumed on the next business day. Despite Circle's assurances that redemptions would be met with reserves, people are still nervous, and with good reason. As Stephen Jung, director of research at The Block Research, pointed out, if Circle holds its cash reserves with many other banks, and those banks experience a bank run like the one we saw with Silicon Valley Bank, it could lead to USDC depegging again. And that's not a risk that everyone is willing to take. Of course, not everyone is panicking. There are still plenty of crypto enthusiasts out there who see this as just a blip on the radar. And who knows? Maybe they're right. Maybe USDC will weather this storm and come out even stronger. Or maybe not. Only time will tell. In the meantime, it's worth remembering that stablecoins aren't infallible. They're only as stable as the reserves that back them. And when those reserves are in question, things can get pretty rocky pretty fast. So, if you're thinking of investing in stablecoins, make sure you do your research and understand the risks involved. Now, moving on to our next story. If you haven't heard yet, CNHC Group, the issuer of the CNHC stablecoin pegged to the offshore Chinese yuan, just raised $10 million in a Series A+ funding round. KuCoin Ventures led the deal, with Circle Ventures and IDG Capital also participating. This is great news for the company, which launched its stablecoin in 2021 and has been steadily increasing its adoption ever since. With the fresh funding, CNHC plans to continue expanding its reach, particularly in the Asia-Pacific region. The company is even moving its headquarters to Hong Kong from the Cayman Islands to take advantage of the city's burgeoning crypto scene. But why is a stablecoin like CNHC so important in the crypto world? Well, for starters, stablecoins provide a much-needed stability in the often volatile world of cryptocurrencies. While other coins like Bitcoin and Ethereum can see huge swings in value, stablecoins are designed to maintain a steady price by being pegged to a real-world asset like the US dollar, or, in CNHC's case, the offshore Chinese yuan. This makes them ideal for use in everyday transactions like buying goods and services or sending money across borders. And CNHC is no exception. In fact, the company's stablecoin has already been used for money transfers and cross-border trade settlements. With its increased funding, CNHC plans to expand its use cases even further and become an integral part of the Web3 ecosystem in Hong Kong. Of course, it's not all sunshine and rainbows in the world of crypto. Just last week, the New York State Attorney General sued KuCoin Crypto Exchange, which led the CNHC funding round, for allegedly operating as an unregistered commodities and securities broker or dealer in the state. But let's not let that put a damper on their success. In fact, CNHC's success is a testament to the growing acceptance of cryptocurrencies in the mainstream world. With more and more companies using stablecoins for everyday transactions, it's clear that cryptocurrencies are here to stay. And with the help of investors like KuCoin Ventures, Circle Ventures, and IDG Capital, companies like CNHC are well positioned to lead the way. So, what's next for CNHC? The company plans to list its stablecoin on more centralized and decentralized exchanges and expand its on- and off-ramp services. And with a growing team of around 60 people, including hires in operations, compliance, and business development, they are well prepared for the road ahead. Congratulations, CNHC, on your successful funding round. We can't wait to see what you do next. And now on to our last breaking news of the day. Web3 data warehousing platform Space and Time has teamed up with South Korean gaming firm WeMade to power its gaming services. Founded in 2000, WeMade is a well-known game developer famous for its popular role-playing game, The Legend of Mir 2, which had a huge following in China. The company has since transitioned towards blockchain technologies and now offers over 20 play-to-earn games. The partnership with Space and Time will allow WeMade to leverage its developer tools and combine on-chain and off-chain data in a single trustless environment to enable enterprise-scale analytics and fast transactions. This move will help the company facilitate more complex earning payouts for its games, run tamper-proof analytics against game activity, and reduce on-chain storage costs through its data warehouse. We believe that blockchain is the future of gaming, offering gamers greater ownership and control over their digital assets, said Shane Kim, the CEO of WeMix, WeMade's blockchain developer subsidiary. As the blockchain transformation of traditional games continues to grow, the partnership with Space and Time will help strengthen our blockchain infrastructure capabilities and contribute to our commitment to building an inter-game economy. The data warehouse provided by Space and Time aims to provide companies with a single warehouse to find out what in-game events lead to online transactions. Space and Time's CEO Nate Holiday told The Block in a recent interview that the company planned to focus on Web3 gaming and DeFi protocols. The strategic partnership comes at a time when WeMod is looking to strengthen its blockchain infrastructure capabilities and contribute to building an inter-game economy. WeMade's blockchain developer subsidiary, WeMix, has its own token called WeMix Coin, which is currently trading around $1.80. The company has recently announced plans to launch an Ethereum Layer 2 protocol using zero-knowledge proof, ZKP, technology. It's worth noting that Microsoft has recently backed both WeMade and Space and Time. WeMade raised $46 million from investors in November of last year, while Space and Time received $20 million in a strategic funding round in September 2022. The blockchain transformation of traditional games is gaining momentum, and partnerships like this will undoubtedly accelerate the adoption of blockchain technology in the gaming industry. It's an exciting time to be a part of the crypto world, and we can't wait to see what's next for Space and Time and WeMade. Stay tuned for more updates. Make sure to comment down below what video you would like to see next, and hit the like button if you learned something new or found the information useful. Also, please consider subscribing if you like this type of content. That's all for now. Until next time, guys.